Hello, welcome back. My name is Brandon Watson. Today in this video, we're going to go over NIO's charts. As compared to the last couple months, things are looking a little bit better. And with recent news from their CEO on Friday that NIO is starting construction on their second factory, I think it's time that we dig a little bit deeper into their share price and where they might be headed to in the near future. Now, jumping right into the charts, we'll first start by drawing out our support and resistance levels. But before we do, I just want to mention that the 9 and 25 EMA are crossing over quite nicely here on the daily chart. This is precisely what we want to see, and although we might not have caught the exact crossover, we are still in a decent position if you're considering this long term. So as of right now, we have our most recent main support at around the 31.60 level, with a secondary support that's yet to be tested sitting near 39.75. Assuming the EMAs hold and support the share price, then NIO should be in business to trend higher, though assuming that there could be a shakeout to the downside this coming Monday, as institutes and large firms try to rake in new shares, then 39.75 is going to be the level to watch and hold. If it can't, then the share price could drop back to the $34 to $31 range as it retests the support into another round of consolidation. It's doubtful that the share price will ever drop below $30 per share again, though if it does, and you bought above 30, then I wouldn't want to be in it. I'd rather get out below and find a cheaper price if I were a true believer of the stock. Anything below $30 and you're likely to test 20. Though again, I highly doubt this as a scenario, but I wouldn't be doing my job if I weren't providing all the possibilities up front. So saying that, it's not like anyone could just go and take on Tesla without first building up a base. And even Tesla built up a base before shooting up, which, with all things considered for the first half of the year, things have been rather gloomy for these popular stocks as many dropped over 60 to 70%. NIO, on the other hand, looks more like a retracement into a former consolidation rather than a straight down reversal, albeit while still a 50% retracement from NIO's all-time highs of $67, with consolidation potentially turning into a solid uptrend from here. I think it's wise to say that NIO has the capability and attention to reach back for all-time highs within a month, maybe two. It's certainly done so before from this level, going from $40 up 69% to $67 within 3 weeks. The 48% push from 40 to 57 took only less than 2 weeks. Of course, back then, things were driven by hype and speculation without any regards to fundamentals, whereas today, it seems things are mostly driven by less hype and speculation and a slight degree towards fundamentals. So if NIO wants to get back to all-time highs within 2 months, it's going to need some more good news coming out. As of right now, reports are showing that NIO recently revealed a code name for a new high-end electric vehicle lineup. Maybe this is why share price has been on a nice and beautiful steady climb up on the 1-hour chart as price bobs and weaves in an orderly fashion above the 200 EMA. Be careful though, as price is now testing old support levels that failed to hold and will now act as the resistance as price climbs back up. One of the easiest ways to play this is to dollar cost average in from either the 1-hour or the 30-minute charts as price comes down on different days to test the 200 EMA. Assuming that price holds that indicator each time, then scaling in off the support of the EMA will help ensure that your shares are heading in the right direction. Start buying or holding below the 200 EMA though, and you start to take on the risk of holding or buying into a downtrend. Sure, you might get lucky and buy near a bottom while you hope price starts to reverse, as I am sure many people did on these days here. But why go through that stress of buying on the way down when you can buy the same region as things turn up and around? Of course, it's always easy to look back at a chart and say, do this or do that, but buying off support and a crossover will always be the safest bet, while selling when things cross back under could save you from bigger losses and could help in securing a better price for yourself. Now, assuming that NIO can reach all-time highs again, then I think it's a good possibility for the share price to start reaching for $100 at that point. NIO is the type of stock with a popularity behind it to drive it that high, and once you reach past a certain point, people psychologically start looking at the ultimate number. 75 will nearly be a given as price taps 70 and attempts to push through it and capture new longs at the top. From there, price will more than likely attempt to shake them out as it retraces back below the $70 mark and retests $60 to $65 as a support. If that holds, then you bet it'll be the springboard to drive NIO up past 75 as they attempt to take on Tesla in the EV space. So drop a comment below on what you think about NIO. I think I'm going to start adding a little bit here and there as things start to take on each level. And although things can get a little bit tricky with popular stocks, I think the way that this has been moving pretty orderly, it's fairly good potential for an easy 40% return. I don't know, we'll see. I hope you take care, have a great weekend, and I'll see you next time.